So the journal is one other book of prime entry that is used more often in the business. So the journal is also known as um, the general journal in some books, textbooks. So this one is a general book of prime entry. It's different from the other specialized journals that we have looked at, like the sales journal, the purchase journal. So actually, the journal or the general journal is used to record all those transactions that are not recorded in the specialized journals. So which are these transactions? Possibly, let's look at a few examples here. We have opening entries. When you are starting your business, you want to record, you want to open ledgers to start recording or to do bookkeeping. You need to make first entries, and the journal is there to do that for you. And it is there to record when assets are bought and disposed of, right? Especially on credit. So which means here the buyer is not paying cash, or when you buy an asset without paying a cash for it, so you can record in the journal. Again, we use the journal for depreciating non-current assets. Yes, it's a book for that. We also use it for making adjustments for provision for doubtful debts, increasing or decreasing. And then we can use this to write off bad debts. Yes, so these are some of the functions. The functions are many depending on the type of business, but in today's illustration or demonstration, I'm going to look at how to use the journal to make opening entries. When you are starting a business and you want to use the journal to make opening entries. So I'm going to use this illustration here for Rodent. Rodent opened a retail store on 1 January. So this is our date, 1 January 2019, and he introduced the following into the business. So these are the things that Rodent brought into the business when starting the business. These were some of the assets that he brought in: inventory, shop fittings, cash, right, of 11,600. But of this cash amount, 11,000, sorry, was paid into the bank, right, into the business bank account. Okay, fine. On the same day, which means same day, 1 January 2019, Rodent received a check, received a loan of 30,000, which was paid into the business bank account again. So it's a lot of transactions that took place on that particular day, but we just want to demonstrate how to record them in one journal at the same time. So required, prepare a journal entry to include all the above information to open the books of the business on 1 January 2019. A narration is required. So we are going to do two things here. We'll do the journal entries and then we'll do the narration. Okay, let's use the space below here. Right. Okay, I've listed my assets that Rodent brought in when he started the business. So what happened is, these were the assets that were brought in when the business started. And as you know that when we are doing a journal entries, we start with those items that are recorded in the debit column, right? So in this case, we have shop fittings as a non-current asset, right, of 24,000. Then the next one is inventory, 18,500. And then the next one is bank. Let's go to bank a little bit. I want you to understand what is happening with bank here. Remember, when Rodent came in on that day, he had cash, but this cash was split into some cash that was deposited directly into the bank, 11,000. And the bank account also received a loan here of 30,000, which means in the bank account on the starting day, we have two amounts, right? We have 11,000, right, which was brought by the owner, plus 30,000, which is the loan that is deposited into this bank. So if you see, it amounts to 41,000. This is the amount now in the bank account. And again, I want you to understand the cash situation at the moment, that the cash originally was 11,600, but 11,000 was deposited into the bank, which means in the cash box, only 600 remained on that day. So cash at hand is 600. Okay, fine. So these were the assets that were available on that day. Let's go on to look at, so how much was the capital for this? We don't know, but we know that this Rodent also got a loan from bank. So a loan is a liability to the business, right? Now, if we add all our assets in this side, they should give us like 84,000. These assets, they should give us 84,100. Now, if 84,100 is the value of all these assets, and these assets are coming as a result of the loan plus the capital from the owner, so how much is the capital? So it's 84,100 minus 30,000, which gives us obviously 54,100, like that. So it means now the capital that the owner brought in is 54,100, right? So these assets are financed by the capital plus the loan, right? So the question requires us to make a narration, isn't it? Maybe describing what this is all about. So we now say, being assets and liabilities. That were used to start the business. All right. By Rodent, right? So we know Rodent brought assets and some liabilities in the form of loans to start the business, and those assets, they are constituting part of the capital of the business. So that's the narration. So I hope you have understood the use of a journal here. It's used to make opening entries in books of account, like we have done here. I hope this is beneficial to you. Don't forget to subscribe for the next illustration that is coming.